Hello guys, it's Max here from Daily Market Movements. Today it is to the 29th of September. It's a Wednesday, which means that we are halfway through this trading week. On Monday I posted a video explaining where I anticipated the markets to be heading throughout the week, and every Wednesday now I'm going to be posting just like a mid-cap video where we can basically just see where the markets have traded from Monday to Wednesday and where I anticipate them to trade from Wednesday going into the end of the week, going through to Friday. But before I start today's video, I just want to say a huge thank you to everyone in the past 7 days who signed up to our Signal service. We've had a very large number of you join our team, so a massive welcome. If you do want to join our Signal service, and you can find the link in the video description, it's www.dailymarketmovements.com. And also we've had an even larger number of you join our brokerage. So you now have trading accounts with us. You're trading on our brokerage following our signals, and that's fantastic. So a massive welcome to the Daily Market Movements team. Now, you don't have to be following our signals to be trading on our platform, but you know, if you do, it can be good as well. So massive welcome to everyone who's joined our signal team and has created a trading account on our trading platform. But let's start with this week's videos. So let's kick off with the gold over the US dollar chart. Now, on Monday I said I was very bearish and I was looking for a continuation of a fall down towards that 1680 to 1700 level, and that's exactly what we've got, especially yesterday. You know, yesterday we dropped from that 1750 area where we found ourselves trading in between 1800 and 1700, and we fell to a session low during today's trading session down at 1725. This is fantastic. This is exactly what I've been anticipating for the past couple of weeks here in the gold markets. I've been very bearish since we hit those 1830 areas. I'm not going to explain it all again, but for those who watched my videos on Monday and last Friday, you will know that I explained that we are currently trading in an ABC pattern here. This is an ABC correction, and for this to become bullish, we would have had to have broken above the B highs, which was around that 1830, and on 3 separate occasions we got rejected, and that sent us trading back below the 250-day EMA. This tells to me that we are at least heading for a double bottom. It's whether we bounce it, that's the big question, because if we bounce, that could give us enough strength to break above this downtrend that we've been trading in since we achieved those all-time highs back at the start of August. But I believe that it's more likely that we will break below the 1680 area and go and target that 1500 area where we traded back in March 2020. So 1680 is where I'm really targeting going into Friday. Whether we get there before Friday, I don't know. I don't really want to put a timeline on it, but I am very, very confident that we are going to go down and at least achieve that 1700 price within the next couple of weeks. So I'm not saying it's going to happen within the next two days. That's not what I'm saying, but what I am saying is that everything looks to be lining up very, very nicely, and I've got this market pretty much spot on since we got rejected at the 1830 area, and I personally believe that within the next a couple of weeks we will see the gold price trading down near 1700, potentially down to 1680, and then the big question from there is whether we break below it. But moving on now, let's open up the Nasdaq100. So the Nasdaq100, very interesting. We got absolutely slaughtered during yesterday's trading session, and in fact we are pretty much trading on this uptrend line. We're pretty much trading on it, which is at that 14,848. We broke below 15,000, and the reason being why is because we've got the 10-year yields moving towards the upside. Now, we saw a very similar move in the markets dating back to February 2021. That was that January-February move where things got a little bit crazy. We had the likes of AMC, the likes of GameStop surging to record highs. We had the 10-year yields rise from 1.3 all the way up to 1.6, and of course we had a pretty big pullback back at the start of the year, especially in the Nasdaq100. And why? Well, that's because the Nasdaq100 contains many growth stocks. And when I say growth stocks, I mean the likes of CrowdStrike, the likes of Apple, the likes of Facebook and Google. These stocks have incredibly high valuations, and their earnings are forecast within the next 5 to 10 years. So when investors are buying the likes of Apple, they're buying that stock because they believe in 5 years' time it's going to be valued at this certain price, which is always very high. So that's why they are called growth stocks and they're not value stocks. So they're very expensive stocks. And when the 10-year yield is rising, this means that interest rates are expected to be hiked at a lot earlier stage. So Currently, investors believe that interest rates will be hiked at the start of 2023. I personally think that they will probably get hiked towards the end of next year, so the end of 2022, and that is why we are seeing a move higher in the 10-year yields, because many other investors share the same opinion as myself, and you are seeing those 10-year yields move towards the upside, which is putting pressure on the growth stock. So I personally think that I wouldn't really touch the Nasdaq 100. I still believe that we go higher. I lost my trade where I bought at the lows of last week, so that trade did go on and hit my stop loss. The Signal team lost money. I will openly admit it. We have lost this trade, but the game plan for myself right now is to wait until Friday. Now, why Friday? Friday is the first day of Q4. September, historically speaking, is a very bad month for the stock market. In fact, it's the worst month of the year in terms of performance for the stock market. But of course, on Friday, it's the 1st of October, which marks a very bullish period for the stock market as we go into Q4. So on Friday, I'm going to hopefully buy the lows. I'm hoping that we don't bounce too high from this current price, because it's very attractive. It offers some fantastic value. In fact, if I put a price range on it from here, sorry, that's the wrong one. Let me just get the price range. We are currently trading 6% off the all-time high. So we've had a pretty much 5% correction here already in the Nasdaq 100, and hopefully we can stay around this area. And then when we go into Friday, which is the new quarter, I will be purchasing a significant amount of these of the Nasdaq 100 future contracts as we go in towards the year end. So very, very bullish on the Nasdaq 100. Great dip to take advantage of here. Also, I recognize that on the RSI, we are approaching the oversold territory down at 35. So we have a little further to move towards the downside, which is great. But as I mentioned, this offers a fantastic buying opportunity. Now, moving over to the S&P 500, very similar. It hasn't taken such a big hit as the Nasdaq 100, because it isn't just made of these massive growth stocks. It has a lot of value stocks in it as well, but it's actually looking a lot more better than the Nasdaq 100 because we're still supported by that uptrend line. But again, same strategy as the Nasdaq 100. I'm waiting until Friday, a new quarter, and typically speaking, on the Friday you will see some bullish pressure going into the weekend, as it is the start of a new quarter, and people will be closing out many positions going into the end of Q3 and then reopening them as they go back into Q4. So I'm very bullish here for the S&P 500. It offers a fantastic risk-reward ratio if you put your stop loss just below the uptrend line. Again, just like the Nasdaq 100, we are roughly 4.3% off the all-time high, so that offers some fantastic value here. The RSI is down near 30. We're currently at 40, so we have plenty of territory to move towards the upside. There's some great money-making opportunities here in the S&P 500. Now let's open up the crude oil markets. Now, the crude oil markets, we've had a great week, and would you look at that? Crude oil did achieve, the high of that green box that I put. We pretty much clipped at the top of this Fibonacci chart that I've put up. I said it's very likely we're going to go and target the swing highs up at $77. We traded as high as $76.74, so we were 25 cents short. I know that many of you have taken profit. I've had probably about 50 of you contact me on WhatsApp, just thanking me for this forecast. You bought down here, you were going to take profit around 74, but you listened to my videos and I said that you should wait until we hit $77, and you were happy with the profits, and you took it up at $76.70 a barrel. So congratulations to everyone who managed to capitalize on that trade. Now, if you still hold the crude oil, if you still hold your crude oil positions, do not worry. I still believe we trade higher up towards the full extension because we didn't quite get there. So we have pulled back from $76.75 a barrel, but I personally believe that we will trade up towards $77 a barrel. Yesterday it was a little bit worrying when we traded down towards 74, but this is perfectly fine. But I personally believe going into Friday that we will have a second attempt to go and target $77 a barrel. So that's what I'm looking to do going into Friday. I still have my buy position, which I opened down near the 50-day EMA at $70 a barrel. Open. Also, my Signal team currently bought crude oil down at $75 a barrel, so we're currently in profit here. And as I just mentioned, I'm targeting that $77 a barrel, which marks the full extension, and there I'm going to take my money and run. I'm not going to open any short positions, any buy positions. I'm going to wait for that pullback, perhaps down towards the 50-day EMA if we're lucky enough to take advantage of within the next couple of weeks. But as you can see, the RSI is approaching that overbought territory. We still have some room left to run, as we are currently at 66, so 70 of course, is the overbought mark for the crude oil markets, and we haven't quite touched it. So, that's why I personally believe that we will go in and have a second attempt at that $77 price target. Let's open, last but not least, the Euro US dollar. Now, the Euro US dollar got hammered during yesterday's trading session. That's with the 10-year yields rising. Of course, that benefits the US dollar. Now, we're at a very crucial point here for the Euro US dollar. For those who've been watching my video for some time, you will know that I am bullish on the Euro US dollar. But now we are targeting the bottom of this orange box. If we trade towards 1600, that's where I'm going to have to potentially open a sell position, because we've just broken this key level of support. We bounced here, and of course we bounced here a few months back, and it's fantastic support over the past couple of years. Well, not the past couple of years, the past year or so, I should say. But if we break below here, well, then technically speaking, that sends us down towards 1.11, potentially 1.12. But one thing that I do like is that we are considered to be sold on the RSI. We've broken through this uptrend that we were forming on the RSI, so I'm going to scrap that. But we are now considered to be oversold, so this could be a fantastic buying opportunity. I'm still not, I'm still not giving up on my bullish bias. I do prefer the euro over the US dollar medium to long term. I think we do bounce here. It's just a 10-year yields rising. I think this is a temporary move towards the upside for the 10-year yields. I think we go to 1.6, perhaps 1.7, and then from there we have a breather. So I do believe the euro US dollar will rise in the medium to long term. There might just be some volatility in the short run. So I'm still a buyer here. I haven't yet opened a sell position. If we break that 1.16, then I will have to open that sell position from a technical point of view. But right now, from a fundamental point of view, I'm very, very bullish. So that is it. I'm going to wrap it up and keep it sweet and short for this Wednesday's video. Of course, I will follow up with a video on Friday, just basically concluding this week's movements, see where I was right, see where I was wrong, and then, of course, as we go into next week's trading session. But if you would like to receive trading signals from myself, then you can do so. Head over to my website, as I explained at the start of this video. I leave the link in the description of this video, www.dailymarketmovements.com. Or if you're just looking for a trading brokerage, then please head over to our website, www.dailymarketmovementstrading.com, and that will take you to this website here, and that's where you can go ahead and open a brand new trading account. Thank you very much for tuning in, guys. I hope you enjoy the rest of your weeks, and I will see you all on Friday.